Live from Bloomberg Studios in Washington, D.C., I'm Kaylee Lyons. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance. Coming up, a bit of the Bitcoin boom fades ahead of the Fed. Optimism remains, though, as investors grow increasingly confident that spot Bitcoin ETFs are just around the corner. Plus, we talk to Perianne, CEO of the Chamber of Digital Commerce, as JP Morgan CEO Jamie Dimon tells lawmakers he would shutter the entire crypto industry if he had their power. And Abu Dhabi is becoming a popular destination for crypto companies. We'll discuss why executives are drawn to the enclave. All of that is ahead, but first, let's get a snapshot of the market. The best way to do that on your Bloomberg terminal, CRYP Go. And what you will find is it is a bit of a mixed picture. You're consistently seeing downward pressure on Bitcoin in recent days. Already had the worst three-day stretch between Saturday and Monday we've seen going back to August, and we are adding to those declines today. Right now, the largest digital asset down by more than 1%. We're around $40,700 and so dollars. We'll have a closer look at what's going on with Bitcoin in just a moment, but you're seeing some of that selling pressure extending to other tokens as well and other digital assets. Ether down by about 2%, even more so for Solana. This, of course, was a token that had run up substantially so far over the course of 2023, and you're seeing that give back as we come toward the end of the year. Solana today certainly is one of those under the most pressure, down more than 6%, but there are some standout upside performers as well. Binance Coin being one of them. It's higher by about 3.4%, though I don't necessarily have a firm explanation as to why. I also don't have a firm explanation as to why exactly we have seen this sudden volatility and downward pressure coming back to Bitcoin. There's been a lot of different theories out there, but let's take a look at one chart in particular that may explain some of what we are seeing take place. We have to consider that over the course of the year through Saturday, when we started to see these declines, Bitcoin had rallied more than 160% year to date. And what that meant is if you take a look at the RSI, the relative strength index, basically a momentum indicator, it had extended into overbought territory. With declines we've seen, though, in recent days, we are no longer in that overbought territory. So perhaps it's not all too surprising to see a pullback, a bit of consolidation here. Of course, it's a question as to what happens with pricing going forward. And last week, Anthony Scaramucci actually weighed in on the outlook for Bitcoin, specifically in the year ahead. Take a listen.
I think the exponential growth of wallets and the exponential adoption of Bitcoin globally is going to push prices higher. And it's an early asset, it's early in the adoption cycle, but things are moving exponentially. And I would recommend people to stay the course.
Early in the adoption cycle, he says, when it comes to Bitcoin. But what about for blockchain technology more broadly? Let's discuss with EY's global blockchain leader, Paul Brody now. Paul, great to have you back on the program. As 2023 comes to a close, have we seen that greater adoption when it comes to blockchain, or are there still too many barriers standing in the way?
It's been a pretty good year, I think, overall, right? For better or worse, one of the things that's unfortunate is that adoption of blockchain technology for industrial use cases tends to mirror the asset price. When the asset price goes up, people are more open and enthusiastic. When it goes down, it's lower. This year has been kind of a bit of a reconstruction year, but a lot of the sort of underlying technology problems that are blocking past adoption have been solved. Ethereum has got much better scalability thanks to the layer 2 ecosystem. We've cracked the code on a lot of the core privacy technology issues that make it possible to do complex smart contracts on the public Ethereum network. So we're inching along, but I think 2024 is going to be much, much faster growth rate.
On the idea of scalability, of course, that has been kind of a headwind more broadly when it comes to capacity, to blockchain technology's ability to kind of service as much as it potentially could. You think really that scalability problem is solved, or does that still have a ways to go?
I think it's mostly solved. So if you go back to like the past big blockchain booms, both Bitcoin and Ethereum, they tended to sort of slam into capacity constraints. Ethereum is a good example, plus or minus roughly about 1 million transactions a day Ethereum could do. Whereas if we go into the next, if we're looking at the next phase now, if you add up all the layer 2 networks that are scaling on top of Ethereum, you're talking about hundreds of millions of transactions a day that are possible. For EY, we've developed a layer 2 network called Nightfall. It's a privacy enterprise-only network, and we think, for example, the upper limit is 400 million transactions a day, and honestly, that's way more than the current demand exists for.
And I know at EY, you're really focused on kind of this technology being used by the C-suite. You've also written a book on this that was released earlier this year. How much of it does need to be happening at kind of the business management level, the adoption of this technology, thinking about the ways it can be incorporated into business? And how much do you think it's an issue that really stems from where I am here in Washington? Just still some skepticism about this technology and, frankly, the role it plays, not just in the financial ecosystem, but more broadly.
So the skepticism and the concern about regulatory clarity is hugely impacting industrial adoption, even though industrial use cases like ESG traceability, like carbon traceability, supply chain procurement, they don't require regulatory approval, but users do look at the regulatory state and they're hugely influenced by that. And one of the things that makes me really optimistic about the coming year, for example, is Singapore, Japan, Australia, Europe with the MICA legislation. Regulatory approvals are coming for this ecosystem, and it's for sure going to have a huge impact on the financial side, but we are really seeing that's having a meaningful impact on business adoption and readiness to use the technology as well.
You mentioned their ESG, and obviously there is kind of a climate carbon role that theoretically blockchain is able to play here. Can you walk me through that? Knowing COP28 is about to wrap up, there's been a lot of conversation about the tracking of the carbon footprint, of the reduction of emissions, of the role that ESG plays, of course, obviously in financial services, but something businesses are thinking about more broadly. What role does blockchain play in that?
So blockchains really excel when you think about trying to keep track of complex business process and data across multiple companies. So one of the big things that's going to happen is roughly in 2026, it's expected the EU will implement a carbon frontier. And in order to move goods through this carbon frontier, you're going to have to be able to explain where your goods came from and what kind of carbon footprint they have. To do that, you're going to have to keep track of all these different suppliers and business partners who are accumulating carbon along the way. This is a use case that blockchain excels at. Another one we're seeing is battery recycling. A lot of business models for batteries depend on recycling. Tracking those batteries as they move through the supply chain, hugely important. And then things like power purchase agreements, paying for green power. We're starting to see the first implementations of blockchain-based smart contracts for tracking power consumption, managing rebates, dealing with like the mix between, say, the market price and a contract price. So we see quite a few applications around carbon traceability and sort of carbon reduction in the blockchain ecosystem.
And when you talk to businesses at EY, how much do you think they are kind of engaged in that, knowing that maybe there are some ways in which their current processes are lacking in that regard? Is this one of the primary solutions they are kind of turning to?
So the biggest gap in almost all enterprise process solutions is how one enterprise interacts with another. This is almost always the biggest problem. So over the last 25 years, enterprises have done a really good job installing ERP, consolidating their systems, building out analytics, starting to adopt AI. They're doing a great job internally, and all these really cool capabilities that they've been built internally sort of fall apart when they need to deal with a supplier or a customer. I had a client in Singapore tell me they're still faxing orders to their key suppliers. And with blockchain, we can switch not only to a digital model, but one that includes both data and smart process. And so it's these intercompany interactions where enterprises are looking for it to work much, much better. And our big goal is to hide all the blockchain complexity. Our goal is to make it very simple to plug your enterprise data system into a blockchain ecosystem without having to be an expert in blockchain, in math, and cryptography, and privacy.
All right, Paul, great to have you back on the program. Thank you so much for joining us. That is EY's global blockchain leader, Paul Brody. We appreciate your time. Now, coming up, we're going to turn next to Perianne Boring, Chamber of Digital Commerce founder and CEO. She'll join me here in Washington to discuss updated crypto legislation, the landscape here on Capitol Hill, and when it comes to the regulators. And of course, you can access all of the latest data and news on crypto by checking out CRYP Go on the terminal. But outside of crypto, before we head to break, we do want to point out the bond market following the 30-year auction just a few minutes ago, drawing a yield just ever so slightly lower The pre-sale when issued yield 4.344% on the 30-year versus the pre-sale yield of 4.34%. The market was prepared for this to maybe not go so well. They expected it to tail. So the fact that it went okay means you're seeing yields dropping just a touch. We're down about 2 basis points right now on the 30-year yield. This is Bloomberg.
Today's terrorists have a new way to get around the Bank Secrecy Act, cryptocurrency.
You pointed out the only true use case for it is criminals, drug traffickers, anti-money laundering, tax avoidance.
Do you think that crypto companies facilitating financial transactions should have to follow the same anti-money laundering rules that your bank has to follow?
Unanimous, absolutely.
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 All right.
I've always been deeply opposed to crypto, Bitcoin, etc. If I was the government, I'd close it down.
I am not usually holding hands with the CEOs of multi-billion-dollar banks, but this is a matter of national security.
That was some of the back and forth between the CEO of J.P. Morgan, Jamie Dimon, and other big bank CEOs, and Senator Elizabeth Warren, the Democrat from Massachusetts, last week. And just yesterday, Warren expanded bipartisan support for crypto legislation from her colleagues on the Senate Banking Committee. In a statement, she says, "We need new laws to crack down on crypto's use in enabling terrorist groups, rogue nations, drug lords, ransomware gangs, and fraudsters. Our bipartisan bill is the toughest proposal on the table, cracking down on crypto's illicit use and giving regulators more tools in their toolbox." Here to discuss this and other legislative efforts is Perianne Boring, Chamber of Digital Commerce founder and CEO. She's here with me in our Washington, D.C. studio. So, Perianne, the legislative conversation on Capitol Hill was originally in the House. It was market structure. It was stable coins. I guess those efforts are still underway. But it feels like this anti-AML bill that is being helmed really by Elizabeth Warren is picking up steam. What is the chamber hearing about this? What do you think?
Well, first we need to call it what it is. Senator Elizabeth Warren's anti-money laundering bill would effectively ban cryptocurrencies in the United States. This would be detrimental to our national security. Open source money, blockchain-based technology are advanced technologies. It is critical for our national security that we are at the forefront of leading in advanced technologies. And by banning them, which is what this bill does, it puts our head in the sand. It lets our adversaries and the rest of the world lead in this space. This is a very dangerous conversation that Senator Elizabeth Warren is pushing, and there's a lot to unpack in those clips that you talked about. Why is it that the banks are pushing this? Why is it that there weren't any technology experts weighing in? These are really big questions that the U.S. Senate must consider before moving forward.
Well, it does seem like it's building momentum. As I said, another additional 5 senators signed on to co-sponsor this legislation. When you say it would effectively ban crypto, what then is the line or the appropriate response if you do want to target terrorism financing, for example, install some of those safeguards while still allowing the industry to do what it does? How would you like this to be changed?
Well, we should talk to not bank CEOs. We should talk to law enforcement and ask them what they need. The Treasury Department issued a terrorist financing assessment, and in that assessment, it found that the vast majority of terrorist funding is going through the traditional banking system in cash. The FBI has also acknowledged that this has been an incredible tool for law enforcement. Even the former director of the CIA has written about how this technology, because it's an open and a transparent ledger of all the transactions, very different than cash or in the traditional banking system, it creates new tools for law enforcement because you can see all of the movement. And that data that we're collecting, that law enforcement is collecting, compliance officers are collecting, the industry is collecting, it's allowing us to understand how terrorist networks work more holistically, which is giving us new tools. So we should listen to law enforcement, not politicians, not bank CEOs.
Well, you say politicians. Obviously, this is an effort that really is emanating from the Senate. In the House, it's been a very different story. Even if this were to get approved in the Senate, do you think Patrick McHenry and the Financial Services Committee in the House would allow this to go through?
There's absolutely no way this is getting through the House at this given time. There's competing bills in the House that would strengthen AML provisions, but it would actually there's other proposals that would protect the blockchain industry and blockchain technology to allow the U.S. to lead in this areas of advanced technologies. The House is giving a very different sentiment. They're saying the U.S. should lead, we should be at the forefront, we should be creating a regulatory framework that allows for clarity for businesses to build, operate, invest, and deploy these technologies here in the United States, not push them overseas where they can be out of our jurisdiction.
Well, and that's consistently what you hear from Financial Services Chair Patrick McHenry, who is really the one who has been driving these legislative efforts out of the committee and with the Ag Committee as well when it comes to the market structure bill. But Patrick McHenry is running out of time. He's retiring at the end of his term. And frankly, we're heading into an election year. There's clearly a lot that Congress is dealing with on the funding side of the equation. Do you sense that this is still a priority? What are you hearing in terms of realistic timeline of this legislation actually moving forward?
So I think the fact that Patrick McHenry has announced that he's leaving, it increases the priority. Chairman Patrick McHenry has really taken digital assets as one of his legacy issues that he's taking on as he retires from U.S. Congress. So he has a lot riding on this bill and moving it forward and it passing, and he has, even more incentive to do so now.
Is there someone the chamber would like to see replace him on the Financial Services Committee as chair?
There's a number of members of the House Financial Services Committee that are that have been champions of this space. In terms of a new House Financial Services chairman, we want somebody that has taken the time to understand how the technology works. We don't want someone like Jamie Dimon, who is proposing things that are technically impossible to implement, or Elizabeth Warren. Her bill doesn't work with the technology itself. So whoever is going to serve in that role, whether it's the chairman of the House Financial Services Committee on the Senate Banking Committee or serving as the next Treasury Secretary, you need someone who understands how this technology works, because this technology is shaping the future of global finance. And if they don't understand it at a technical level, how can they lead the nation to success?
Well, and of course, there's a question of whether the next chair is even going to be a Republican, depending on what control of the House looks like. How much do you think is riding politically for the crypto industry in 2024? How crucial a year is it going to be?
It's a big year because policy is changing in real time. There's over 40 million Americans that own cryptocurrencies, including Bitcoin today. And if all of those people got out and vote and made sure that we had people in office that understand this technology and want to make sure the U.S. is going to lead in this technology, we will lead the country in a much more brighter spot than where it is today.
All right, Perianne Boring, good to see you. It's been a while. Thank you so much for joining us here in Washington. She, of course, is the Chamber of Digital Commerce founder and CEO. Now, coming up, we're going to have a little bit more for you, including crypto theft in 2023, nearly half of what was reported in 2022. We'll have those details next. This is Bloomberg. Now let's get to some crypto stories that caught our attention this week, including hackers have stolen an estimated $1.7 billion in 2023, according to TRM Labs. That's less than half of last year's tally of $4 billion in losses. The top 10 hacks have netted criminals almost 70% of all stolen funds this year, most of which were blockchain infrastructure attacks. Stanford law professor David Mills, who led defense for FTX's Sam Bankman-Fried as a favor to his parents, says Bankman-Fried went off script when he took the stand. Mills told Bloomberg that SBF repeatedly veered away from his lawyer's strategy. And Mills says, quote, he may be at the very top of the list as the worst person I've ever seen do a cross-examination. And Binance announced the withdrawal of a license application in Abu Dhabi just over 2 weeks into the tenure of its new CEO. Binance, of course, the world's largest crypto exchange, was already adjusting its footprint ahead of a $4 billion settlement with U.S. authorities last month. But not everyone is bailing on Abu Dhabi. In recent weeks, it has become a popular destination for crypto companies seeking eager investors and friendlier regulators. Bloomberg's Emily Nicole reported on this overnight and is joining us now from London. So, Emily, what's driving this, the shift to the Middle East, but to Abu Dhabi in particular?
Well, if we think about what the crypto landscape has looked like for the last year or so, it's definitely been the US was the hotspot. But regulators there have not been as friendly as those overseas, particularly if we think about the likes of Binance, Coinbase, Kraken, all of those receiving attention from the SEC with complaints and some of them settlements. And so companies have been thinking, where can we go next? Where would there be a regulator willing to host us? And also, where would there be money? Where would there be investors willing to back us? And that, it turns out, is the UAE.
Well, when you say investors willing to back, how does it rank in terms of other hotspots for that kind of investment? Is it starting to overtake other players, or it's playing a game of catch up still?
It's definitely still a game of catch up. It's definitely still early days. If we look at the list of countries and regions, MENA is about the 6th largest crypto economy in the world, according to Chainalysis, compared to North America being the top. But things are still definitely in flux. We've heard from executives over the last few weeks who have launched units in places like Abu Dhabi, saying that they've had a lot of support from sovereign wealth funds and officials in the region. And so it's definitely making a big play to attract crypto companies there, whether that's through regulatory policy or whether that's through funds and money.
Okay, so the crypto companies go there, then it becomes a question of how these companies and crypto more broadly are going to perform. What does this maybe indicate in terms of what we can expect from the market in 2024?
Well, the job now is also for crypto companies to convince investors in the region that crypto tokens are something worth buying, something worth investing in. If we look at assets recently, we have Bitcoin has risen about 150% so far this year. That's nothing to be sniffed at. But if we look at market depth, which is a way we can assess, if a market could sustain a massive impact on prices, that is still well below levels that we saw before FTX collapsed in November 2022. So the liquidity in the market and the ability for it to function is still nowhere near what it was even when the bear market was happening. The idea that the bull market is what we're returning to with Bitcoin, I think topping around 44,000 last week, that is something that is still in flux. And that's something that investors in places like the UAE, where they're probably a little bit more crypto friendly, a little bit more new to this market and willing to overlook some of the frauds and scandals that the industry has had, that's something that's still coming.
All right, Bloomberg's Emily Nicole joining us from London. Thank you so much. We really appreciate it. Bitcoin right now trading just north of $41,000. That does it for this week's edition of Bloomberg Crypto. But don't worry, we'll be back at the same time next week, Tuesday, 1 p.m. Wall Street time, right here on Bloomberg.